My check, my check. What's up, you guys? How y'all doing? Today is November 20th, 2023. And yeah, we're back at it again. We had a stream not too long ago, but I had some free time. So today is a beautiful day. It's Monday here, and we have another opportunity to really just really I want to do some TA and just kind of look at some of these things going on currently. Bitcoin has popped up just above 37,000. We have Ethereum that is just hovering right above 2,000. But more altcoins continue to flourish in this environment currently. And so, as always, I always want to take a look at capital flows and rotation. We've done a lot of talking about just like the macro stuff going on. We'll briefly start with that, but I really want this to be crypto focused today. And really kind of give us an idea on how to think about process. That's all I'm about, is just trying to inform you all that this is going to be a process, nothing more, nothing less. And if you guys look at the intro, there's a beautiful picture of Mount Everest, and that's exactly how you have to see investing. A lot of people don't survive and get to the top. Back to the matter. But the beautiful thing is, if you have a long duration time outlay as far as how long that you're willing to stay in this game, you're just only going to give yourself more chance to succeed. And climbing up the mountain, there's steps that you got to take, right? So besides that, appreciate y'all for coming through. We'll jump straight into it. Yo, Alberto, what's good? We got Wade in the chat as always. And who else we got? We got Navin. Yes, sir. Catching a live one. And replay gang is where it's at, but catching it live, there's nothing like it. So today, I have a Coke Zero in my hand, and so let me see if I can go ahead and pop the top. Yep, I got my energy. So the weather outside is a little rainy today, but outside of that, it's been a very flourishing November. Assets have had a very nice bounce in terms of people having positive sentiment towards it. And I think that at the end of the day, that's just what matters. The market is going to decide more things than one individual person. So whatever Jerome Powell says, or whatever Gary Gensler does, or whatever one founder of one coin is doing or not doing, the market will continue to do what it does. And that's the best teacher that we all have. So with that being said, let's see if we can get into it. Appreciate y'all for coming through. And Wade, this is super important. Survival is key, but you can only survive with the information that you know. And guess what? If you're not equipped, then guess what? Surviving is a lot harder versus if you've done the research, you've done the time to just be around, and you have the focus with duration. It only increases your survivability, basically. And so these streets are cold out here. And only the best and only the strong are going to be able to make it, So if you're here now, chances are, if you stick through it, you'll make it. So glad to see you as always. So let's jump in, and I will present to you guys a couple things as we just continue to, just dive in and take a look at some beautiful things that we're seeing here on some of these charts. These altcoins are really, that's what a lot of us are here for, truthfully, For those that are saying, hey, I'm not necessarily in capital preservation, but you're trying to grow your net worth or your capital, altcoins are going to be a larger portion of your portfolio, most likely. So if y'all can see that, let's rock. So what I'll do is I'll start with a couple things. Let's start with some of these bond yields, and we'll just look at the 10-year and the 2-year. Just keep it pretty basic. Let me just take some of these things off. That way we don't get confused. We'll take the extreme greed and fear metric off. So let's condense that down. We'll condense the RSI down. And the MACD will condense that down too. So what we have here is the 10-year bond yield, and this is the daily chart. I think what may work a little bit better to get some more data in here is let's go ahead and look at the weekly chart. And for a very long time, as these yields continue to do what they do, they oscillate up and down, but it's been in a a cyclical downtrend for a very long time. I'm talking about since the late 70s, or if not, early 80s here. So this orange line is kind of letting us know that, hey, these yields through time on average are going down, but they do have their peaks. And so what do we have here? One thing that's very easy to see is when you guys are looking at charts, you really want to look for irregularities, right? So what I mean by irregularities, movements that are not the norm. And so movements that are not the norm are pretty clear to see is this situation here with COVID, with this 10-year bond yield stretching from 3% going down to basically nothing in a span of, we're talking, not that long. Now, the interesting thing about this is, this wasn't only since COVID. Like, if you guys want to time stamp this, COVID happened March of 2020, but bond yields started to have a severe flush down. We're talking about, early 2019, and even, late 2019, January 2020, the bonds already were flushed out when COVID was happening. So it was a very interesting thing. But this major underthrow is what we'll call it. So, we'll go ahead and label that, because these are things to kind of notice as you guys are learning on, looking for irregularities. So this underthrow, let's get that spelled correctly. Underthrow, right? What was clear. Now, typically, when you have an underthrow that is irregular, you are going to have an overthrow, So now the proportion may not be the same, but it's going to trend up in a different way than it has previously. So as you can see, this has broken the trend up top. So now we have an overthrow. Okay. And so this is, what we've experienced for a good chunk of time, as we can kind of denote here in this box. So for quite some time, we're talking about since May of 2022, over a year and some change ago, we've been in this no man's land as far as what the heck is going on, because people are not used to this even breaking trend, yet alone seeing that these yields are staying up here for such a long time. Because in general, right, whenever you see some of these local peaks or these local tops, you're gonna see a couple of things. You're gonna see it get there, right? So if I can kind of get this arrow, it's gonna make these tops, but at some point you see that direction change in terms of the yield, right? Whether you're looking at this time when it was 5% and then it went down. But and this is not a situation where it's like staying stagnant, I guess you can say, for long durations of time, right? You see a clear direction within a variable of 6 months, give or take. Like if we were to maybe pop this on like the 6 month chart and, bring in some of this data. Here, let's get that straight. So let's bring in some of this data. It's very much easy to see that, we're not having these large green candles on the 6 month chart that are just continuing to expand past the mean. And as you can see, like all these points, you can see, okay, cool. Every 6 months, we're having a clear direction of saying, okay, we have done what we need to do, and the direction changes. And what helps us see that direction even more, right, for example, is Heikin Ashi candles. And then so this period here of these consecutive green candles is very different than what we've seen, since the 70s. And this is, really letting us know that this time we have to take other things into consideration. And so the biggest thing that we have to take into consideration is that this is going to not only help us understand why the federal funds rate is kind of sticking around here and people are acting like they don't know what to do, right? Because they're thinking like, oh, well, we've got to drop right away, or we've got to hold for, a whole year, here at 5.5%. But one thing that's very important that, if you guys do the research, that the federal fund rate always tracks behind the 10-year yield and the 2-year yield, right? Like these, short to like the 10-year is like the main yield, the midterm yield that the Fed follows. Like if you were to overlay the Fed's fund rate, you would see that it tracks behind this. And so what are we really looking for is a major inflection, where we see we want to probably even look at like the 3-month chart where we see a quarter of, yields going down, right? That is going to be the major inflection that we're looking for. Because like in all of these scenarios here, so like, this scenario here, that scenario here, this scenario here, when we're able to have 3 and then 6 months of negative, bond yields going down, that lets us know, okay, it's time for Fed to follow. And this is going to lead the Fed anywhere between like 2 to 4 months. So what I'm looking for is simply this. I'm looking at the monthly and the 3-month continually. And all I'm like, we thought we had an opportunity here, right? But I legitimately want to find, okay, first signal, that monthly chart showing us, okay, another red candle, but we want to see a large red candle, right? A large red candle going the opposite direction. And then the next thing that we're looking for is our first red candle on the 3-month. As soon as we get those, then we can say, all right, cool. It's a very high likelihood that the Federal Reserve is going to start to drop those rates. And so keep that in mind. You don't have to wait for the Fed to announce things, right? There's other things that you can look for us to be able to have a clear understanding on the movements of how these rates are going to be moving, So, and I mean, what I can do is let's just go ahead and pop on the Fed funds. So Fed funds. And so, I think it may be better if we put this on its own chart. Let's see if we can do it. So let's add Fed funds. All right. And we are doing this live. All right. Cool. And then let's see if we can actually turn this into a line chart. Okay. So if as I'm kind of telling you guys these things, right? If we want to take a look through time, and then so in blue is the 10-year bond, and in orange we have the Fed's fund rate. If we want to line up when we have an inflection in yield on the 10-year, and let's make sure that we can see that. So we'll just put a white vertical line. You can see that it's briefly before the Fed decides to turn around as well. So situation like there, obviously situation like here, right, where it's topped out, and it's like, okay, cool, we've topped out, and then the Fed then follows. Situation here, right? So in October of 1994, 10-year bond yield tops out, and then after that, we find ourselves that the Fed does the same, So we need to keep looking for these inflection points, right? Same thing here. 10-year tops out, Fed then decides to follow. 10-year tops out, Fed decides to follow. So forth and so on. Like we can plot this all the way down. We can plot it. Same thing here. So same thing here. 10-year tops out. This is looking like a July of 2018, and then in April 2019. So this is some time, but Fed follows. And so we're looking for that. We're looking for this to go ahead and get a nice rush down on the 10-year at some point, in 2024. And give some time, give some months for the Fed to follow, but they will follow. And this is just something to make note of. Okay, so we started with a nice little macro idea / concept to remember. Let's go ahead and jump straight into Bitcoin, because Bitcoin is pumping a little bit here. So we have Bitcoin on the weekly chart, And as y'all can see, we've had consecutive weeks here of these green candles being printed. One sec, let me take a swig of the Coca-Cola. All right. So the interesting thing that we need to kind of look at is same thing that I was kind of talking about in the last stream is we had a lot of resistance here at 25K that has now turned into support. And so if we are to have some scenario where people no longer want to hold this asset in particular, then there's going to be a tremendous amount of support here at 25K. So that's pretty clear to see and understand. Now the interesting thing here is where we find ourselves is, in this gap, like, we can really call this no man's land as well. Simply just because if we were to go ahead and take a volume profile just from the bear market to where price currently is and see what that looks like, right? We have a lot of accumulation. Let's see if I can zoom in so we can all see that. So we had a lot of accumulation here all through about like 30K down to low. So this $15,000 price difference from 15 to 30. And now we find ourselves, pushing through this gap here, right? This low liquidity area got pushed straight through. And so, the interesting thing is, this is kind of like that no man's land before we get to like that next level of resistance, like that next level of true resistance, where we're going to find ourselves. Because, there's many smaller levels of resistance. Like, we could, if we put this on the daily, for example, we could extrapolate a whole lot of other levels as far as like, resistance, for example, where we are currently. So if you want to just do simple lines of resistance where we are currently, that's another point of resistance. And you really just want to find another area where price, either oscillated through. So for example, this wick here and these portions here. So, we could find ourselves in another batch of resistance here. All right. But basically, the biggest thing that we have to look at is like investors are extremely active within this range, right? And then so, the interesting thing is they're active, and then we have another cavity in up until about like this $46,000 range. But this is like that clear because the biggest thing is the psychological resistance is something that I would say is very important to think about. So, for example, when we thought things were not too crazy, and it was very murky to see if we were in a full-fledged bear market at this time, especially since we had a recovery 2022. So this March of 2022 high was about 47,000. And so people will have that in their minds. They'll remember it. And, one of the biggest things is, when we come and approach that point, that's definitely going to be some resistance. And so, a lot of things to kind of keep in mind in regards to just watching the flow of Bitcoin is that as we trek up the mountain, we already know that it's never just going to be straight up until liquidity just forces it and pushes it back up, right? And then so one thing I do want to kind of briefly talk about at some point is how stablecoins, looking at the supply of stablecoins, especially when they're minted, is a big thing. And stablecoin, to make sure that you have tabs on, is the stablecoin that's being used the most, which is USDT. Which let's actually segue that way really quick. So let's look at USDT. And the easy way to look at supply is just get an idea of what the market cap is doing. And it lets you know, are they adding more USDT or less? So adding more circulation to USDT, which actually is good for crypto because it allows more of that USDT to be turned into altcoins, right? And so if we were to look on this weekly chart, for example, we have the most amount of USDT that we've ever had. And it's right about 87 billion, which is great. The interesting thing is if we were to go ahead and prop up, Bitcoin, you can easily see how these two are correlated pretty heavily here, right? And really since that pivot point, March 2022, when USDT was getting printed pretty well, so that was allowing us to recover in the midst of like that bear market. And then when they're saying, hey, we need to take away some of the supply of USDT, simply that's when the rest of the flush came down. But we did find a bottom for USDT, right? And same thing, we found a bottom for Bitcoin as well. So those trek pretty evenly. And now as more USDT gets minted, Bitcoin price seems to be following pretty dang close here. So this is a beautiful thing. So what y'all can do potentially is go over to Twitter. Y'all want to follow USDT or any page that is announcing when more USDT is being minted. That's going to let you know, ding, 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 more liquidity within crypto specifically has just arrived. And one of the things that I think is super important is to actually educate yourself on how USDT is minted. The beautiful part about it is USDT, as they get reserves from people. So basically, let's say these large institutions, wealth managers, money managers, they're looking to start to get their stable coins. They have to deposit actual fiat into the bank of USDT. When those assets or those fiat currency units get sent to the bank account of USDT, then they are allowed to mint more USDT. And so it's back to one for one. And so there's a video on their website, if y'all have not seen that can explain that in a little bit more in depth. And so this is a good sign. So something that you definitely want to put on your watch list on TradingView is this supply of USDT going up. That's a very beautiful thing. And the biggest thing is to understand that USDC is no longer like this is how you know United States is asleep at the wheel, because the supply of USDC is flattening off, right? Is basically not gonna say non-existent, but is not at a premium as what it was heading into March of 2022. Because the very interesting thing is that you see a divergence between USDC as far as how people are using it and the minting of it, and USDT. USDT had a fall off, but it had a nice recovery at the beginning of the year. USDC, the demand just simply has not been there, especially here in the United States. So, this is continuing to lose market share at 24 billion, while USDT is continuing to create new highs at, pushing above $80 billion. And so this is a beautiful thing because through the years, it's going to be beautiful to see people trading in that fiat currency for a stable coin. And, it would be nice to even see 300 billion, half a trillion dollars in stable coins that then get issued into other assets within crypto, aka all the altcoins that we currently hold, right? So this is a good thing to monitor and to keep abreast upon your knowledge, right? So outside of this, let's also look at what else we got. I do want to look at Illuvium, because Illuvium is breaking out, breaking out. Breaking news: Illuvium is breaking out. So, I mean, I've been recorded several times all throughout, this bear market for Illuvium to say, hey, Illuvium is something that I think is going to surprise a lot of people. And I mean, my bags are packed. I've been an investor in Illuvium since, 2020. Well, yeah, early 2021. And so, the biggest thing here is, as we experience a long, tumultuous bear market here, we're able to see Illuvium start to break past its previous local peaks here. But the biggest thing, we want to see a close above this level of 107. So this is looking promising with the start of this week. With these full-bodied candles, and the biggest thing is to say, hey, what does this thing look like moving forward? Like, what can we potentially expect if Bitcoin continues to either stay stable? I mean, basically staying at this 36 to 38K range, or if it wants to push up higher to 40K. I guess we'll have to find out. But just from an example, something that I was taking a look at, because just taking like an average price. So, moving through all the noise up and down. Let's say we were taking the average price of like $45 just to get back to the all-time high. All right. So just to get back to all-time high, you are banking in, give or take, about 40x. That's beautiful, And so this is an if, right? And there's a lot of things that need to happen. One, they need to have a successful game launch. So just to update y'all on that, what we can do is put a reminder out saying, okay, on epicgames.com. So epicgames.com. They're launching the beta on the 28th. So November 28th. So y'all can go ahead and sign up for that. But I don't know if this is going to be a sell the news event. We'll see. Long term, I'm really on the side of saying that this has a chance simply because from what I've seen, there hasn't been too many other games that are going to have the opportunity to get mainstream adoption by partnering with Epic Games. I know Shrapnel is another game that I was looking at the other day, but just in general, these guys have got a real good shot. I remember when they were saying back in December 2021, like what put this top in for them when the market was starting to go down, but why this was to really like break out so much into almost like $2,000 range was they're announcing, hey, we're ready to launch this game, blah blah blah. So it's really all about like seeing the development in true time frame. There's a lot more things that they've done to the game. Like back then, the game didn't, have a lot of the features that it does now. So I was just glad to see positive development for the game. And now that they actually have a legitimate date, where it's like this, they can't take this back. Like they can't be like, oh, we got to push this back. When you're starting to deal with some of these mainstream platforms, they lock you in. When you're just dealing with the founder or the founder saying blah 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 on Twitter, you have to take a grain of salt. So this is a very good sign in my opinion. Now, same thing if we were to kind of look and take a volume profile of the data that we do have on this. This is not the full price chart by any means for Illuvium, by the way. But if we just want to take a look at this bear market and the beginning of this early bull run here, the biggest thing of what I have here are these two yellow boxes, right? So one thing I want y'all to kind of see is there are huge gaps. So huge gaps that typically are going to be filled. And the price is going to be allowed to shoot up through them because of these are low liquidity areas. And so one of the biggest things, that you really want to be looking for if you're saying, hey, and this is like long-term thinking here, like this may not happen here in the next, 4 to 6 months. It may get pushed out to, 2025. But, the best part about having large gaps like this where there's low liquidity is it makes it easy for price to push up and through them. And so we have two major gaps. And so those gaps are in between the price of $187 and also the price of $271. And so really it's just, once we start to get in range through 187, it makes it very easy to get to 271. So if you want to look at that and say, hey, that's my risk tolerance is to be able to fill a gap. If you consider yourself to be like a swing trader or something like that, you look at the risk to reward situation here. And so, what are we seeing on the sides of probability? So breakout probability currently. So let's see what we got here. So we'll zoom in. And currently the breakout probability is favoring to the upside, compared to the downside. So we got 49%, 41, 39, and we just got 37 flat to the downside. So that's actually a pretty good situation there. Now, can we see follow through? It remains to see how Bitcoin is going to react through, I would say, really the end of the year, really. But the beautiful thing is not only does that gap exist, but there's another gap where there's very low liquidity. And this is between the price of 326 and, almost 500, about $468. And so risk to reward, And we're talking about, let's say they have a successful game launch. They're able to, keep people interested, keep eyes on them during this time. What are we thinking? And so the simple way to take a look at that is a couple ways. Let's take this down move here. So we'll do a fib retracement all the way from the top to the lows. And what we'll find is that a lot of these gap fills line up with the typical fib levels. And so your 618, the golden ratio is going to be on that upper end at about like $430. And then if we're able to break through the halfway, because basically we have 0.5, that's basically meaning halfway up the ladder, and typically if you're able to make it halfway up the ladder, mean reverting back to where price was prior, the chances of you getting there is a lot higher versus if you're staying below this 0.5 for years at a time. And so the closer that we travel towards $270, it gives us a higher likelihood of us making it back up to, where we're talking 1,000, $1,500. And so that's the beautiful thing to see. I think the more exciting thing just in general is, the advancement of us being able to have the opportunity to fill that gap is simply because we're past, this 236 level here. So let's actually remove these gap filled areas and just look at the fib level. And so typically, what's going to allow a coin or an asset to be able to break out even further is when they finally have a chance to break past and sustain this 236 level. And so this is beautiful because we did that recently here in this past, few days really. And so what we're looking for is just follow through, and that's going to give us a nice likelihood to just make it to that next split fib level. And that's going to be to about like $169. And so risk to the downside, you're saying, okay, cool. We retrace back and, we go back to these base and lows, right? So we'll just take an average between this price somewhere about, let's say 50%. And another way that you can verify that is just take the fib to current highs and then saying like a major drawdown down to this 786 or anywhere in between like 0.5 and 786 is kind of where you'll see a major pullback if there is to be one. So that's leaving you anywhere between 47% to 58%, give or take, down draw from current prices versus the opportunity to go ahead and start to fill these gaps. And so, if you could give yourself a time horizon of, 2 years or more, the likelihood of that happening, I think is a lot better versus if you're just trying to, get this gain within the next month or so. No one can tell you that. But, from this first level here, 60%, and then just getting to that 0.5, 144%. So give or take. So this is not as sweet of a deal versus the people that accumulated back here at about like I said, $45. And so, but in the grand scheme of things, right? This is what is this like 440%. If you're in crypto only to just try to snag a 2x or 3x at a time, it's gonna take some time to, I think, get to where you want to go, truthfully, unless you're a person that has hundreds of thousands or millions of dollars. For the average Joe, what's going to be able to allow you to get those gains that you're looking for is duration. And so duration looks like being able to withstand whether this goes down 50%, okay, buy more. Or if this goes up another 200%, are you going to blow your load too early and just, take half your stack when there's much more liquidity coming to these markets through time? So Illuvium, I think, has a really, really good chance through this bull market simply because it has relevance early in the bull market. And typically when we see things having like a front run over other coins, especially in the same category, within GameFi or whatever the case may be, there's some other coins like Rune and Solana that are front running a lot of other coins. these are actually good signs for them to have a high viability of making all-time highs in this next cycle. And so versus like a laggard, right? So a laggard, like a coin that is continuing to make new lows. Like these lows clearly have been defended at about, $38. So Illuvium breaking out, looking pretty good, and we'll see. The deal is not as sweet as I mean, that's how fast crypto is. The deal is nowhere near as sweet as 6 weeks ago, a month and a half ago. You know how crazy that is? Like essentially, now we have, let's just kind of, because that's why you just want to be, sometimes trying to pick a specific time to buy is hard to do. You just want to be in the asset because, we just look at the time duration. So this thing, was on a long down draw. We're talking about for 250 days. And those were all just smacked out of the water within a span of 28 days. All those gains came back, right? And so, I mean, you could even really, take that measurement all the way from, this point here. So over a year, right? All of this like boringness, this is where it's at. This is where you needed to say, hey, do I think that this is viable, right? What are they doing? What do they have to offer? And if you think the proposition is worth it, you would have been DCAing here, or if you knew about it. But so if you're new to Illuvium, what I would say is you're still in favor of positive outcomes if you wait long enough. But you probably would want to be an accumulator of this coin sooner than later, right? Because once the train leaves the station, it's gone. So that's Illuvium for you. What else can we take a look at here? Solana. Solana has been the talk of the town for all the people who like larger caps. And a lot of people thought Solana was dead simply because they had to do with Sam Bankman-Fried and FTX. But Solana's a different protocol than FTX. That's something that I always kind of reminded myself of. And, I never sold any of my Solana bags whatsoever. I just held on. And so, more accumulation was a possibility for those that, was able to withstand this death candle here. Like, this is crazy, right? Like, imagine. And this is in 1 week. Imagine, in 1 week, you're watching like your life within this coin flash upon your eyes. And 60% of the value that you had is gone in a week. That's what bear markets do, man. But these were ill-gotten gains being, taken back. So now, easy TA for Solana. If we want to just look at some points of emphasis here. So what was support became resistance and then breakout. So let's take this off for now. And we'll take these vertical lines off. All right. So what was support became resistance, and then there's a breakout. Typical fashion. This underthrow here is matched with an overthrow on this side. Is there consolidation in the future of Solana? We will see. If we were to kind of take a look at this fib from the top, so we'll take the top of that peak to the lows and see how are we, coming back up. And what we find ourselves doing is, really breaking past some levels. So, we had a little resistance here at the point 382, but then we really just shot straight through 382. I'm sorry. We shot straight through 0.5, and we're getting some resistance at the golden ratio. And so, if you were to do this fib on many different altcoins, Solana would be one of the few that, and especially like major caps, that are this expanded above its low. From the low, Solana is, and we'll just take the bottom of the candle to current price is 479% up. Now, not too many people were able to necessarily get that low, but if you, were, had conviction, you would have been able to, DCA all throughout like the 18 to, anywhere like the $25 range. And so you'd still be up on a double or even almost like a 3X, give or take. And so, this is something to ask yourself, if something is extended like this, will it down draw? and what can the down draw look like, and when could I potentially DCA? Well, I have a beautiful indicator that I coded up on PineScript that might be able to help us out with that. So let's take a look. So this thing fires off anytime we find a coin under its 200-day moving average. Like, you won't see any buy signals if it is above the 200-day moving average. Would it just pop above it? But same thing. If you were a person who had access to something like this, you would have been able to have opportunities to buy at $32, $28. Having the conviction to go and grab some down here at 10, which would have been an amazing buy. You're looking at about like $19 and about $16. And so if you want to kind of average those out, yeah, it brings you out to an average of about like $20, give or take. And so, now that we've kind of popped above this 200-day moving average, let's see here. I mean, we're stretching on top of this large, like, so you see how the Bollinger Bands really expand. So we're nice and tight, then they expand. Typically in expansion, there's going to be some type of mean revert back to the midline here in orange. So even for scenarios like this where you see that expansion, at some point you mean revert back to the orange. Like, so this is a better buy versus trying to guess at any point in time there. But then again, same thing is to be said. If you're a person that is seeing several weekly candles pass and you're not allocated to something, it's a dangerous place to try to play, simply because you don't know if this thing is just going to keep pumping, and it's just like, okay, cool, if I just invest now and you'll keep getting those gains, or if it turns around right when you invest. That's the hard game that a lot of people catch themselves in once they are late to a bull market bubbling up. And then so what we've seen is like an early breakout for Solana, but still, the fact remains the same. This is only, a couple months worth of breakout. We're not looking at like a whole year's worth of breakout, like a previous bear market. And so, you're still relatively, I'd say you're still about like, you're ahead of about like 80% of people still. So, you can look at it in terms like that. Let's see if we have any other major things to look at from the volume profile. So we'll do the same thing from that top. And, the interesting thing here is, there's not much action above this current price. All of this got reaccumulated back up in that $20 range, which I was kind of, mentioning before. So to be honest, man, this thing really can rip because there's not much stopping it from doing so. The interesting thing, because Solana, it didn't have like a double top like Bitcoin did. So if y'all remember, Bitcoin, was going through and had that top here, right, in May or like April 2021, and then it double topped in November. This, pushed through its previous May top to a new top in, 2021. So the crazy thing is we are already expanding past, its price in 2021 of May. So there's not much buy action above this. So, what I will say is, if we find ourselves consolidating for Solana over the next 6 months, and if you don't have a Solana bag, this is when you'd want to try to do that, because once we, continue to break out past this area where we are now at about like $60, there's literally nothing stopping it from going to 250. Truthfully, like if Bitcoin wants to make its way to like 50K, don't be surprised if you find Solana at $200. And so that's a great investment for people that accumulate at $20, right? So, or even if you invest now, the choice is yours, but just know that the risk premium is a bit higher compared to what it was, same thing 2 months ago. So things go quick, and it's up to you to make those swift decisions when the time is calling you to do so. What else can we take a look at? Let's just look at another front runner. So Rune. So Thorchain, same situation here. So let's clear this out. All right. So let's take all this stuff off of here. So same thing, indicator firing off for us. So at these points here, so we'll opportunity to buy Rune at $1.40, another one at $1.22, and then another opportunity at we're looking at about like 80 cents, give or take. So that would have been a nice average, 3 opportunities, and things take off. So we don't have any sell signal up here if you are looking to take profit, which means there's still a little bit of a bullish bias still. And if we were to kind of do the same thing of saying, okay, where can this really face some true resistance? Because if Bitcoin is still trickling up, then all these altcoins can run. We'll take the high to current price action, and same thing. Now this has a little bit more buy action than Solana did, because see how this is like slowly going down as far as the volume profile. Solana would just like emptied out at these higher levels, and so this can grind higher versus just shoot higher, if that makes sense, if it is to go higher. But same thing on the downside, it's still pretty thin right here, and then where the major support here is where I have it on this green line here, which is about like $3 flat. So $3 flat. So, another thing to kind of assess for yourself, you want to take this major low to the high, and then so a drawback, a healthy drawback, that 382 right there lines up with the $3 range. That's if I am to try to accumulate more, which I do have a bag of this, I wouldn't be buying now currently. I'd wait for somewhat of a pullback, something showing me that there's some consecutive weeks of some downwards action. Because in all truthfulness, we still don't have that crazy jolt of everybody wants to mint this market yet. That sentiment is not here yet. So a drawback is going to be due at some point before the halving. You just got to be positioned and ready to take advantage of it, because we really can't assume that there's going to be, or project that there's going to be many large drawbacks after the halving that is going to be able to give you those those sought after gains, those 10x's, 20x's, and other like. So just really kind of think about that aspect on waiting if you decide to allocate. So we'll take that fib level off. One thing that we can do is I want to actually throw up the MACD for this coin here. So the MACD, something interesting here, that we finally have broken past the midline here in 2023 as far as the moving averages go. So the moving averages went past the midline here in October, and you can see quite an expansion of bullish green candles here on the MACD. So that's a good sign. Now what we want to see is sustained action above this midline, which what we can do is actually look at that daily to see if there's any slowdown. And we see a little bit of slowdown here on these last 3 candles, but not much. Like what you would see to say, okay, are we seeing like the early stages of a pullback? Is you want to see this go negative. And typically once you see it go negative, like so for example, August of 2023, you have a nice, uptrend, but once you start to see this go negative, so let's go back and look at, let's see, the 25th of August. So we'll put that there. And then, so now you can kind of see, okay, like, yes, price expanded up, but then you start to see that pullback coming in. And so, just one of those things that, yeah, that would have been a great opportunity to start to DCA after an expansion, because as you can see, kind of going back here, it spent some time here from August of 2023 to like mid-September to be able for you to go ahead and grab some before things got extremely bullish. And the thing is, nobody knew that this expansion here, like this breakout, was going to be what it is, right? So, within a span of, we're talking about a month, you seen this thing pop up and hit a beautiful 300. That's that's what happens in crypto, right? And like I say, but you want to be the person that's already allocated to receive that, not the person trying to, oh man, let me try to finally rush and buy the top. And so ideally, yeah, you do want to stay away when you see the expansion like well above the midline on the MACD, but you see consecutive green candles. Like I'm staying away from this until I see a drawback worth grabbing, and ideally a nice drawback would be back to this 200-day moving average, which is trending up. So, the next 30 to 60 days, you may have that opportunity, because even if you want to look at the RSI, yeah, that's, you're starting to see some divergence, but not too much. Let me see. So, well, no, not too much. Like you're still seeing this stay pretty strong as prices climb as well. So no bearish divergence for this just quite yet. What we would want to see is if this makes a higher high in price, but the RSI doesn't make a higher high at that point, then you'd say, okay, we have some bearish divergence. So then we would, have to go ahead and change it there at this sort of angle here. So, we're going to remain to see that. But yeah, but beautiful time to be buying Rune. All these buy signals down here, right? So all these opportunities here below the 200-day moving average and at these local lows. And if you want to line that up, even with the RSI, hitting below 20, a lot of great opportunities. This, what's past 6 months. So it's all about positioning. Which we still have an opportunity for the next couple years to come. But you want to be able to try to have a lower cost basis by just not FOMOing in at these tops. So yeah, this thing's rocking and rolling, looking pretty good. Let's see, what else do we have? Can we take a look at? Well, let's take a break. Do y'all have any requests of what y'all would want me to take a look at here in maybe like the next like 20 minutes that we have left here? So let's see. Do y'all have anything that y'all thinking about in particular? I'll take a look at maybe like 2 or 3 coins. If not, I have maybe like 1 or 2 that I'll look at, and then we'll call it a day. Going once, going twice, going 3 times. Hey, what's going on, Stefan? How you doing, man? Nice to see you. And yeah, we back at it. It's gonna be a beautiful, beautiful, beautiful holiday. And so I just wanted to, before I spend much more time with my family than on the internet, I wanted to come and do a couple streams here before the end of the year. So yeah, okay. So we got the Hex ecosystem. All right. So we'll look at that. Let me see. Let me just try to pull that. Yeah, let's just go straight to Pulse. We'll go to Pulse first and PulseX, and then we'll trek over to Hex. So let's see here. All right, so let's jump back in. Question: when it comes to bridging into Pulse, what do you feel is the most effective route? Yeah, they've been doing a lot with these domain names. So let's go to Dex Screen really quick. Which that's something, just making sure that you're using the correct bridge, because I remember, let's see, bridge.pulsechain.com. Yeah. And so they gave you, so Richard Hart has done a couple different things to make things even more decentralized. And so the IPFS, you are able to click on any of these links, or you could run it from your own desktop. But for example, if you just want to click one of the IPFS links, then it should take you to be able to bridge here, from Ethereum to Pulse Chain. And typically, I'd use the most liquid stablecoin, so that'd be USDT. And so you could bridge that over to Pulse and be able to transact over there with no problem. So all you have to do is go to bridge.pulsechain.com and you should be good. Outside of that, let's jump over to Dex Screener and let's take a look at PLS. Let's see. All right. Okay. So we're still in an uptrend for Pulse. It's still well below its SAC price up here at this yellow line here, which does still present opportunity because I mean the code works. The fact that it's a layer one, it's gonna trend with the market. So even if it does the basics of just barely trending with the market, there's still 10x, 20x in the cards. Now the question of 300x and 1000x, I think that may be a little lofty simply just because you would need a crazy amount of liquidity to be sitting in these pools. And that's, there's already a lot of holders here. The market cap is already pretty large. So just like Bitcoin, as it gets larger, it's harder to push it up in X's, right? Same thing for Pulse and PulseX, there's a lot of comparisons about, well, this other layer one did 1000x, da da da. Well, yeah, just simply because there was not many people in the ecosystem. The market cap was low, so something that has a low market cap has always been way easier to push up in the amount of X's it can get versus something that already has a whole bunch of liquidity sitting in it. That's just pretty easy to understand. So I've never been in the camp to say that Pulse is going to do in this next cycle 1000x. Now, maybe, 8 years, 10 years down the road, sure. Once you have the compounding of multiple cycles, but I think, sometimes people might be leading others astray by saying, there's a 1000x in the cards. Um, and that is my opinion, and just doing the math behind it, you would have to have a market cap well over, Bitcoin, to like, you'd have to be rivaling Bitcoin's market cap at the top to be able to get this thing to do 1000x essentially, which, you know, I think people like the ecosystem, but I don't know if they love it to just in a span of 2 years equal Bitcoin's market cap. So with that being said, let's take a look. And, we have a nice little uptrend, what we're looking for. Let me see if we can kind of look at a couple different gradients and seeing what's what. And, I would say, let's see if we can find some resistance and support. So let's see if we can line something up here. Yeah. So, okay. So overall, we have an uptrend, but the first level to, see some type of support would probably be here at this, what is this, five, no, 4 zeros and a 5. So 05, which that is another, let's see if we can get these tools out. So from there, that would be another 10% down, which is, that could happen in a day or two, just depends. If that doesn't hold, then there's a lot of support and a lot of like price action movement here, which I think, if Bitcoin doesn't just capitulate over like the next month or two, then it'll find itself finding some type of steady support here in this area. Let's see if we can get the volume profile up. So what we'll do is we'll just take this lower portion from after everyone fumbled out because of the SEC news. And I have to change this to give us a little bit more information. And let's look at this whole chart if possible. All right. So, if we continue to trek down, we may catch some resistance or some support here. I'm sorry, at 5 zeros and a 5, or the point of control for the volume profile is actually a little bit lower here, which, would make a little bit more sense because there's like a lot of volume and participation here in between this area here, but the point of control here at 5 zeros point. So yeah, so 045 basically. And to the downside, and that's an incredible point to accumulate. Like, that's actually what I'm waiting for truthfully, with this, scenario of DCA opportunity. And that would be like an additional like 25% drawdown. But even like, for example, today, like the biggest thing is, hey, are you buying a local peak? No. So if you're starting to, DCA into the major drawdown, which it looks like there's some dumpage happening, then, now would be a time to consider to start a DCA and just make it heavier the more we get lower to this point of control. And so if we were to, let's see if we can do a price call out. So that's going to be, yeah. So here we go. Cool. Which that would be a nice DCA area. And how do we kind of have a little bit more of an idea? We want to put this at least on a daily chart because that was on a 4 hour. And for the RSI, we are equal to the point of where we were at this down draw here in October. And so, about a month and some change later, we're at this same amount of strength level where, this move downward is pretty strong and we've lost a lot of strength going to the upside. And then, so, I mean, the window to, start your DCA trickle in, I would say it'd be about now. And ideally, hopefully we can get somewhere lower on this metric here to at least like 30, which would say, all right, cool. Now the deal is getting pretty dang sweet. And so, for example, what does that look like for which I believe in? There's a high likelihood that this gets back to sack price. So that's 3 zeros and a 1. And so, okay, so we're at 4 zeros and a 5. I see. And so basically, even just to get back to sack price, like that's 85% uptrend. From the point of control here, that would be about 137% gain. Now to the upside, what are some of the prospects to say, okay, hey, if this low holds to the upside, we could have some potential, and the interesting thing is because what we did was we struggled right here at this 382 to get back above that. And then so same thing remains. The fact is if we can get back above this range, which basically it's interesting how a lot of this stuff lines up. So if we can get back above this 0.5 and this 0.618, then the likelihood of us making new highs increases significantly. But if we can't do that before the happening, then we really need to hold on tight, because it may be a while for Pulse to really catch that traction that we're all in this market for and trying to position ourselves for. So, but on the upside, and let's just kind of get the conservative upside. And so, we're looking at, prices in this bull market coming up here. Oh, here we go. So we're looking at prices, through time. So we're looking 2024, 2025. Let's go something like that. Conservatively from current price. Cool. Yeah. Like a nice, 6x to 17x. But, from these lows, give or take, we're looking at like 30x. And that's something to kind of keep in mind. And yes, we could break out past that very much well. So with that being said, but just kind of getting expansive and talking about a 1000x here, right? Because there's 300x. And just think about it. There's 30, like in liquidity, just between Pulse and DAI, there's 16 million. And I believe about in between Wrapped Pulse and Pulse X is about like 36 to 38 million. And so at current prices. So basically, so for example, what we would need to do is if we want to say, hey, we want a 180x, right? So to get this to 1 cent Pulse, we need to do a multiplier of the liquidity in the pools, right? And so 180 times about 36 million. And what does that leave us with? So we would need about $6.4 billion. It's with the B. So that's a lot of money, and that's something similar to, what Bitcoin has in the order books on the daily basis of, a few $1 billion being exchanged on a daily basis. That's it can take some time for Pulse to do something like that, is what I'm saying here. So, and that's like the ecosystem of Wrapped Pulse or Pulse and PulseX. Now, moving on to, and then, PulseX is going to look very similar to this, just a little bit more on the downside. So PulseX, let's take a look. Bada bing, bada boom. Let me make sure. Oh, so the liquidity is even less now, like 29 million liquidity currently. But yes, this chart looks very much similar to what Pulse looks like. So let's just move straight to Hex. On the Pulse chain side, and we're going to look at the daily. And so same thing. This is a much more it's the question is, why is this not pumping with the rest of the market? And ecosystems are going to operate how they want to operate. This Hex has always had this mystique about it to not do the exact same thing at all times when Bitcoin is going up, which is really a good thing. It's a contrarian thing to have in your portfolio. But if you're just looking in terms of like DCA, then, I'd much rather DCA now than this time last month. And so, you're finding that we're coming back into this bulk of price action here pretty soon. Like the only time that, we've seen this go lower was from July of 2023 to October. So yeah, I would like to say that we are now about to enter into a fair value DCA range. But you want to get a great value if we do start to find ourselves drop lower from these portions here. But I have no restraint in saying that I think Hex will survive through time. And the thing is, if you are a betting person, and if you think that the case and Richard Heart may get dropped coming here in the next, month or so, then yeah, you definitely want to hop on opportunity, because you already know people are very reactional in the Hex community, very emotional and reactional. So the buyers will come back in droves if this case gets dropped. So if you want to position yourself ahead of them, now would be the time, truthfully. And so I actually may think about accumulating a little bit more Hex now. So I'd be going for stuff like this versus trying to grab some Solana or Rune or something that's been front running over the past month, because this has consolidated, which, yeah, you want to buy in consolidation, So, it's doing what it's doing now. If we kind of look at Hex on the Ethereum side, so Hex, let's see if we can pull that up. And same thing. We've had some down draw, but these are the pullbacks that you want to be involved with, right? You want to interact with these pullbacks. So, for example, we had in October, and this is how it's so crazy how, like, man, I remember just seeing people like super excited for Hex, literally this time last month. And now they're like, oh, they hate it so quickly just because it's sold off just half of its uptrend, but it's still at a higher point than it was a month ago. Like the community is very reactional. And so, just kind of looking at here, let me see here. So looking at this down draw from, about a month ago, down about 50%. But from, same thing, similar to a month and a week ago, it's up almost 100%. So like 90%. So just keeping things in perspective, this is all about just trying to accumulate through time. What you want to be able to find this in, and it's just like a macro uptrend. So making higher lows through time. We made a higher high, but not really. It didn't sustain. And then so, what I'm actually, let's see if we can put up an RSI on this chart. What I'm looking for is, are we touching the bottom of this daily RSI? But matter of fact, even better, let's look at the weekly RSI. And we're getting close. I mean, we're down here. Like, there's no strength here quite yet. And so, yeah, we're scraping the bottom. We're getting close to it. Yeah, these are areas of where I'd prefer to DCA. So yeah, I think this is looking like a good buy for my portfolio here. I don't know about y'all. Y'all can do what y'all want, but um, yeah, I'm liking this consolidation so far. Because same thing for Hex. Like, the crazy thing is, like, within a week, it went down, consolidated and went down for, we're talking from June of 2023 to October. So what, 4 months? And in a week, it surpassed it. So, bull runs are going to catch people by surprise. That's why, if Bitcoin has started its, advance higher, and we talked about the capital flow going from Bitcoin, then to Ethereum, then to the altcoin market broader. And what we're experiencing now is just, out of all the altcoins that are going to be running here in the next year or two, maybe like the first like 5% of them are starting to like show themselves to front run. Guess what? The other 95% are on the way. You just got to wait, basically. So still in accumulation for a lot of these altcoins, essentially. Hex being one of them, but same thing. I don't see this just dying off. There's too many people that have money invested into it for it to just die off so easily, right? So DCA range, really don't have to do too much TA, right? I think the biggest thing, as long as we maintain 2 zeros and a 3 on the Ethereum side, we're in good shape. And I'm not really too particular on which one I buy, the one on Hex on Ethereum or Pulse. It's all this stuff is going to trend together. So I mean, it's personal preference, really. So yeah, we've done a lot of TA here. We'll check in on Bitcoin one last time at 37.5, looking healthy. We will see what happens over the holiday season. I'm a little bit more in the camp of saying that we'll chill out here for a second. I don't think that we'll just be pushing the 45K just quite yet. But I could be wrong. But either way it goes, it's still a decent time to accumulate some altcoins. But like I say, you really wanted to stay away from local peaks if you can. So here's a little TA for y'all. I hope it helped. I think I'm gonna go ahead and jump off. Got some things to go do here, but appreciate y'all for sticking through. Let's see. If it's not 1,000x, I'm out. Yeah, I mean, like with that being said, 1,000x is a nice buzzword. It's just a matter of saying, hey, being realistic with yourself. Look at all assets, not just crypto. Even a 1,000x in crypto is extremely rare, right? And then so generally that's on things that nobody is anticipating, right? Too many people, in my opinion, are anticipating 1,000x specifically for the Pulse chain and Hex ecosystem. So I think it can get there, but this cycle is gonna make it very hard. I think it's gonna need a little bit more time to mature for those type of gains. But trust me, my bags are so packed. I'm going to be ecstatic even with a 10x because my bags are so packed. So with that being said, I hope y'all have similar bullish sentiment in how you feel with this asset class over the next couple of years. I know I'm extremely bullish, and beyond that, until 2030, I'm in this thing. So with that being said, appreciate y'all for coming through. I look forward to talking with y'all again, and hope y'all have a beautiful evening and a beautiful week coming up here. All right, peace.